This topic is presented by LandInvestorsRus. The rising cost of housing, medical services, and basic goods and services in the last 20 years has increased the cost of living in Texas and the U.S., while real earnings, that is, current earnings adjusted for inflation, are pretty much the same as real earnings of 20 years ago. This makes us wonder, how can a family create wealth to buy a house, pay for their kids' college, or save for retirement? Discover the answer in today's topic. Learn how to build wealth by investing in land. One of the basic problems that economics tries to resolve is scarcity. It refers to the gap that exists between limited resources and unlimited wants. To fix this problem, you have to make decisions in order to allocate your resources with efficiency to satisfy your basic needs, and as many wants as you can. For us to achieve this goal, we need something as simple as a budget. The truth is, not many people or families like to deal with budgets, not even governments do, because budgets have the power to limit what people as consumers can do in the short term if budgets are used correctly. Beginning from today, however, you have to start thinking as an investor, not as a consumer. If you already have a budget, you know exactly how much you can spend, how much you should save, and how much you can invest. If you do not have a budget yet, your homework is to create one, so you can find that out as well. If you need help creating a budget, please email us to the email address that appears below, and let us know. Once you know how much you can invest, you need to think of your future goals. What are your goals? What about paying for your kids' college? Paying for your early retirement? Or just fighting inflation? Now, when I said you should put aside some money in your budget for savings, I meant, as an emergency fund to pay for short-term expenses that you make once a year or expenses that you know are coming soon, like replacing appliances, AC units, etc. Because, you know by now that saving is not the best strategy to reach any of your long-term goals, so the best way to do it is by investing. So, one of the questions we know you have now is, why should I not just save, but invest, and invest in land? The reality is, if you just save money, every year you lose a portion of your money to inflation. Cost of living increases every year while real earnings have remained pretty much the same in the last 20 years in the US and Texas. Think about how the cost of housing has increased over the last 20 years, the cost of college education, the cost of medical services, and in general the cost of basic goods and services. How are you supposed to pay for your kids' college, your mortgage, or your health, auto, and home insurance? If your real earnings, that is, your current earnings adjusted for inflation, are the same as earnings of 20 years ago. But let's say you can afford that, can you still save for retirement? We are sure your answer is no, so you have to invest to be able to reach those goals. Now, why invest in land? Simply because investing in land gives you the power and control that you do not have when you invest in stocks, bonds, gold, or rentals. Do you know what happened in the U.S. financial markets in the first quarter of 2020 right before the pandemic hit the whole world? The Dow Jones was 29,348 points on February 19th, it closed with 25,409 on the 28th and 26th, 121 on the 5th of March, and it went as low as the end of 2016 levels. We can argue that the price of gold has historically risen, and that the stock market has recovered after every big sell-off, but still the factors that make that happen, and the timing for the recovery are not under our control. The second reason is that, you do not need a huge amount of money to build wealth faster by investing in land than by investing in other options. The third reason is that, compared to a rental, you will have less risks, because you do not have to spend money on repairs and insurance like in a rental property. Your taxes are also smaller. And finally, the biggest reason is that as a land investor, your investment has no ceiling to grow, while rentals will have a ceiling depending on what area, city, state, or country you buy the rental property. We know that your next question is there any risk in land investments? Yes, there is risk. Again, all type of investments bear some type of risk. So, one of the basic questions you need to ask yourself is, what is your risk tolerance? Once you know how much risk you can take, then you will be able to determine what kind of investments you can pursue for the long term. If you do not know this, please email us to the email address that appears below, and we will provide with that information to you. Investing in land has risks like other type of investments, but risks are definitely lower, and there are more factors you can control unlike other type of investments. Knowing your risk tolerance is very important though because, depending on what type of risk taker you are, you may be engaging in some investments that bear more risk than others. But this is the good news: the higher the risk, the better the reward. We, however, are going to approach risk taking and land investments this way. First, identify the areas in a real estate market that have lots of potential to increase in value in the short, medium, and long term. Second, spot the properties that you can buy in those markets. Third, reduce the amount of risk that you can control. Fourth, make a risk assessment on unforeseeable factors and determine if you still want to pursue the investment. Fifth, prepare a strategy based on your risk tolerance and present an offer to the property owner. All these steps, in order that you can keep the wealth you will be creating by investing in land. You may also ask, I have never bought land before, how do I know what to do, and what to avoid? The process of buying real estate properties is a very involved process, and for that reason, we recommend that you hire a professional real estate realtor when you start investing. Do not choose a realtor just because it's a friend or relative, but interview realtors and pick the one that has more experience in the areas you want to buy and sell. You can also watch the video 7 Rules Land Investors Should Live By that we created and published in this YouTube channel, where we explained all you need to know about investing in land. Where do I look for properties I can buy? To answer this question, you have to determine what your tolerance to risk is. If you have a low tolerance to risk, you will take a very conservative position and will only buy properties from the open market. You will pay the consumer price, and most likely will have to wait a long time before you can get a profit. That, by the way, it will be a very small profit. If you have a moderate tolerance to risk, you will go one step further and will look in the open market for those good opportunities with high potential. And even if you pay the asking price, because of the high potential of those properties, you should be able to make a high profit in the medium term. You will also look for off-market properties, reach out to the landowners and make reasonable offers that are hard to reject, and as a result, you should be able to make high profits in the medium term as well. Now, if you have high tolerance to risk, you will look in the open market, off-market, foreclosure and tax sales. At this point, since you know the business very well, you should be able to identify any type of opportunity, and be able to immediately assess the future profit, the timing for reselling the property, and with all the business relationships that you may have, you probably already have a client ready to buy. We want to clarify that the higher the risk, the more rigorous and involved the due diligence has to be, the riskier the transaction, the more data points to check and validate. This is the moment when you realize how important a title company is for you as a land investor. How has land historically appraised in the area? Now that I have given you reasons why to invest in land, I will also share historical data from the Area Association of Realtors. First, I want to share information for the Heights subdivisions in Area 9 of the Greater Houston area market from 20 years ago. In those days, you would drive by and see vacant lots worth around $10,000 that people did not buy because the area did not look appealing. Well, if you want to buy those same lots these days, be prepared to pay $80,000, $100,000, $120,000 and $150,000 depending on the size of the lot. These are the high potential properties I was talking about in the previous point, as those that can be bought in the open market for the asking price, but with a high potential. 20 years later you can get a profit that is good enough to pay for your kids' college. Second, I am sharing information on Area 2, Fidelity subdivisions specifically, from 20 years ago in the Greater Houston area market. In this subdivision, prices have fluctuated for several reasons, and after being a depressed real estate area, it's now emerging, as you can see. Price for city lots under $10,000 for a 5,000 square feet city lot, but today if you want to buy, the price is at least twice as much. I have to say that you could have bought these lots for around $1,000 4 to 6 years ago in a tax sale, and these are the type of properties I was talking about in my previous point. As properties bought by high risk tolerance land investors, the risk is high, but once you fully understand the process and the risk you are taking, you have to follow a rigorous due diligence process, and then mitigate your risk based on the findings from the rigorous due diligence process you followed. Finally, I am also sharing information on acreage properties in Area 25, specifically in the Hockley, Katy, North I-10 side, and Waller City where the price of an acre was in the $5,000 range, and as you can see, over the last 20 years, there has been an incredible increment. Now, the increments in the price of land by the acre is different depending on the specific area, the best use for the land, and the timing of the sale. Now that you have all this information, what are you going to do with it? The fact is, given the economic conditions we had in the past 20 years, nobody is able to pay for the big expenses with just a salary. The small disposable income that most families have every month is not enough to pay for them, much less for a provision to retire. That is when investing in land becomes very attractive, because, as you can see, for many type of investments you do not need to have a lot, but you can invest a little and reap the benefits when you need to pay for the big tickets. Thanks for watching. Leave us your comments below, or email us your questions to LandInvestorsForLife@gmail.com. If you like the content of this video, please subscribe to get more.